Listen, Christine Lagarde. 3 minutes ago, I nationalized all foreign banks operating in Burkina Faso. BNP Paribas, Ecobank, Standard Chartered, all seized. Your accounts are frozen. Your assets are ours. No money leaves tonight. 54 African nations coordinated the same action. Your extraction ended. Continental Banking Union operational. Your 66-year financial control died. We took your banks. We stopped your theft. Let me tell you what happened. BNP Paribas operated 14 branches across Burkina Faso, serving corporate clients and government entities. Total assets under management reached $2.8 billion, primarily loans to government ministries and large mining corporations operating in our territory. Interest rates on these loans averaged 12% annually, while your Paris headquarters borrowed money in European markets at 2%. Profit margin of 10% extracted from every dollar loaned. Multiply 10% margin across $2.8 billion in assets. Calculate $280 million in annual profit flowing from one of poorest nations on earth to one of wealthiest cities on earth. Not anymore. We seized all $2.8 billion in BNP Paribas assets, converted all outstanding loans from 12% interest to 4% national development rate. Savings of $224 million annually now remain in the Burkina Faso economy instead of flowing to Paris shareholders. This is one bank, one foreign exploiter among many. Societe Generale seized $1.9 billion in assets. Same pattern, high interest rates, low local benefit, annual extraction $190 million, ended. Ecobank seized $840 million in assets. Pan-African Bank dominated by European shareholders. Extraction $84 million annually, ended. Standard Chartered seized with $620 million in assets. British Bank operating across former colonies. Extraction $62 million annually, ended. Barclays seized $480 million. Citibank seized with $320 million. Smaller European banks seized collectively with $1.2 billion. Total foreign banking assets nationalized in Burkina Faso alone, $8.16 billion. Annual profit extraction that ended tonight, $816 million. Your accounts frozen means every single transaction attempting to move money from Burkina Faso to foreign accounts was blocked at 8:34 p.m. Corporate profit repatriation blocked. Mining companies cannot transfer profits to parent corporations in London or Paris or Toronto. Dividend payments blocked. Banks cannot pay shareholders in Europe. Interest payments blocked. The government cannot pay interest on foreign currency debt. Loan repayments to foreign creditors blocked. Companies cannot repay loans to foreign banks. Salary transfers to expatriate staff blocked. Foreign managers cannot wire salaries home. Personal transfers blocked. Individuals cannot move money abroad. Everything is blocked. Every channel closed. Every mechanism is frozen. Capital controls implemented simultaneously with nationalization giving legal framework. Presidential decree provides authority. Armed forces provide enforcement. Central bank implements technical controls through swift access denial and domestic banking system lockdown. No money leaves Burkina Faso without explicit government authorization. Authorization will not be granted to foreign banks, will not be granted to their shareholders, will not be granted to entities attempting capital flight. Your money is trapped. Trapped permanently in Burkina Faso banking system, becomes our foreign exchange reserves, backs our currency, finances our development, your loss, our gain. Your assets ours, meaning $8.16 billion in banking infrastructure, customer deposits, outstanding loan portfolios, physical buildings, computer systems, ATM networks, branch locations, customer relationships, employee expertise, all transferred to Burkina Faso National Development Bank, created by same presidential decree nationalizing foreign banks. BNDB absorbs all foreign bank assets at 8:34 p.m. December 14, 2025. Assumes all deposit liabilities to domestic customers, ensuring no Burkina Faso loses savings. Renegotiates all loan terms to lower 4% national rate benefiting borrowers, operates all branches under national control serving national development priorities, employs all staff under national labor law with better wages, everything foreign banks controlled transferred to national institutions serving national interests exclusively. This is a permanent transfer, not temporary seizure pending negotiation. Not expropriation requiring compensation under investment treaties we denounced 6 months ago, anticipating exactly this action. Permanent nationalization under sovereign authority. Your assets are ours, forever. No compensation, no negotiation, no reversal. Done. No money leaves tonight or any night thereafter without explicit government authorization that will be rarely granted and never granted to entities connected to nationalized banks. Capital controls are comprehensive. Cover all transactions regardless of size or purpose. All currency conversions from CFA franc to foreign currencies. All international wire transfers through SWIFT or correspondent banking. All trade settlements requiring foreign exchange. All investment repatriation. all dividend payments, all interest payments, all loan repayments, all salary transfers, all personal remittances. Everything requiring movement of money from Burkina Faso to abroad requires government approval. Approval process requires application to Central Bank Foreign Exchange Control Committee. Committee reviews applications weekly, approves only transactions serving national development priorities, imports of essential goods approved, technology imports approved, medical equipment imports approved, capital flight denied, profit repatriation denied, dividend payments denied, interest payments to foreign creditors denied. Your money cannot leave today, cannot leave tomorrow, cannot leave ever unless we decide otherwise. We will not decide otherwise. Capital controls are permanent feature of independent monetary policy. Your money stays here, works for us, not for you. But this is not just Burkina Faso acting alone where isolation would be possible and pressure would be effective. 54 African nations executed identical nationalizations simultaneously in coordinated continental action planned over 18 months through Continental Economic Coordination Committee meetings in Kigali, Addis Ababa, Cairo, Lagos, Dakar, every nation seizing foreign banks at same moment, every nation implementing capital controls simultaneously, every nation transferring assets to national development banks, every nation coordinating to prevent pressure and isolation. Mali nationalized foreign banks controlling $4.2 billion at 8:34 p.m. Bamako time. Niger nationalized $3.8 billion at 8:34 p.m. Niamey time. Chad nationalized $2.4 billion at 8:34 p.m. in N'Djamena time. Guinea nationalized $5.6 billion. Senegal nationalized $8.4 billion. Ivory Coast nationalized $12.8 billion. Cameroon nationalized $9.6 billion. Benin nationalized $3.2 billion. Togo nationalized $2.8 billion. Ghana nationalized $16 billion. Nigeria nationalized $48 billion at 8:34 p.m. Lagos time, largest nationalization in African history. Kenya nationalized $24 billion. Tanzania nationalized $18 billion. Uganda nationalized $14 billion. Rwanda nationalized $6.4 billion. Ethiopia nationalized $22 billion. South Sudan nationalized $2.2 billion. Sudan nationalized $8.8 billion. Eritrea nationalized $1.4 billion. Somalia nationalized $3.6 billion. Djibouti nationalized $2.8 billion. Zambia nationalized $12 billion. Zimbabwe nationalized $6.8 billion. Mozambique nationalized $9.2 billion. Madagascar nationalized $4.8 billion. Mauritius nationalized $8.4 billion despite being financial center. Angola nationalized $18 billion. Democratic Republic of Congo nationalized $14 billion. Republic of Congo nationalized $6.4 billion. Gabon nationalized $7.2 billion. Equatorial Guinea nationalized $4.8 billion. Central African Republic nationalized $1.8 billion. Burundi nationalized $2.4 billion. Malawi nationalized $4.2 billion. Comoros nationalized $840 million. Seychelles nationalized $1.2 billion. Mauritania nationalized $3.6 billion. Namibia nationalized $8.4 billion. Botswana nationalized $9.6 billion. Eswatini nationalized $2.8 billion. Lesotho nationalized $1.6 billion. Libya nationalized $18 billion. Tunisia nationalized $12 billion. Algeria nationalized $28 billion. Morocco nationalized $24 billion. Egypt nationalized $38 billion. Total across 47 nations, $512 billion in foreign banking assets nationalized simultaneously. Annual extraction ended $51.2 billion over decade, $512 billion retained. Over century, $12 trillion. Zion, this is coordinated continental action. This is systematic rejection of financial colonialism. This is permanent transformation. This is African financial independence. Continental Banking Union established to replace your banks with institutions serving African interests rather than extracting African wealth. Headquartered in Kigali, Rwanda chosen for neutrality and strong governance. Capitalized with $512 billion in nationalized assets providing immediate operational capacity. Governed by Continental Banking Council with representatives from all 47 participating nations. Each nation has equal vote regardless of economic size. Decisions require 80% consensus preventing domination by any bloc. Operated according to charter prioritizing African development financing, low-interest lending, capital retention, and monetary sovereignty. Offers development loans at 4% interest instead of your 12%. Offers infrastructure financing at 3.2% for long-term projects. Offers agricultural loans at 2.8% for smallholders. Processes domestic transactions at 0.4% fee instead of your 3%. processes cross-border transactions within Africa at 0.6% instead of your 5%, keeps all deposits working within African financial system instead of extracting to European banks, better terms than you ever offered, local control you never permitted, African ownership you never considered, continental coordination you claimed was impossible, everything your banks were not, everything African economies needed, operational today, processing transactions since 8:35 p.m. December 14th, 2025, 1 minute after nationalization, issuing first loans December 15th, serving customers across 47 nations, replacing you completely, replacing you permanently. Your extraction ended because we calculated exact cost over 66 years since independence. You charged 12% interest on loans to African governments and corporations, while your headquarters borrowed in European markets at 2%. 10% interest rate differential representing pure extraction. No additional risk justified this differential. African default rates were lower than European small business default rates. Differential was exploitation, not risk premium. Applied across $512 billion in continental foreign bank assets equals $51.2 billion extracted annually through interest rate manipulation alone. Multiply across 66 years since 1960, independence equals $338 trillion stolen through interest rate differentials. But extraction did not stop there. Add transaction fees. You charged 3% to 5% on every transaction, while actual cost was 0.2%. Excess fees totaling $840 billion over 66 years, add forced foreign currency debt. You refused to lend in local currencies, forcing governments to borrow in dollars and euros, creating currency risk and requiring foreign exchange reserves. Currency crisis costs and reserve opportunity costs totaling $1.2 trillion over 66 years. Add capital flight you enabled through correspondent banking and offshore accounts. Corrupt elites you cultivated extracted $4.8 trillion parking wealth in your European banks and tax havens. You enabled this. You profited from managing stolen African wealth. Add credit denial to domestic businesses, forcing them to accept usurious informal lending. Opportunity cost of denied credit totaling $2.4 trillion. Total extraction through foreign banking system since 1960, $1262 trillion. We documented every mechanism. We calculated every dollar. We ended all of it. Tonight, simultaneously across 47 nations, permanently. Your threats are empty because every lever you possessed for 66 years was anticipated and neutralized. You threatened sanctions. We coordinated 47 nations representing 62% of African population and 58% of African GDP. Cannot sanction more than half of Africa without destroying your own economies. Your corporations depend on African resources: cobalt, platinum, manganese, rare earths, uranium, copper, oil, natural gas, diamonds, gold. Cannot sanction suppliers of resources essential to your industries. Your manufacturers depend on African markets, growing consumer markets, young populations, rising incomes. Cannot sanction markets you need. Your sanctions are worthless when target is too large and too interconnected. We made ourselves too large through coordination. You cannot sanction us effectively. You threaten asset freezes attempting to seize African government assets held in European jurisdictions. Standard playbook: freeze central bank reserves, freeze sovereign wealth funds, freeze government deposits, freeze pension investments, use frozen assets as leverage, forcing reversal of nationalization. This is what you did to Venezuela, did to Libya, did to Afghanistan, did to Russia, froze billions, forcing compliance or creating economic crisis. You will try same with us. We know this. We prepared for this. We moved assets 6 months ago anticipating exactly this threat. Moved systematically, moved quietly, moved completely. Converted European holdings to gold starting June 2025. Burkina Faso held $18 billion in European assets. French government bonds, euro-denominated deposits, European corporate stocks, all sold gradually over 6 months. Market sales avoiding panic. Small tranches, different brokers, proceeds converted to gold, physical gold, not paper gold, not gold certificates, not gold ETFs, physical bars, standard 400-ounce London good delivery bars, purchased from multiple refineries, Switzerland, South Africa, Dubai, shipped to continental vaults. Kigali Vault holds 180 tons. Accra Vault holds 240 tons. Johannesburg Vault holds 320 tons. Total 740 tons worth $62 billion at current prices. Safe from your seizure, safe from your sanctions, safe from your legal actions. Cannot freeze gold in African vaults. Cannot seize physical reserves you cannot access. Other nations followed same pattern. Nigeria converted $68 billion European holdings to gold. Kenya converted $32 billion. Ghana converted $24 billion. Senegal converted $18 billion. Ivory Coast converted $22 billion. Ethiopia converted $28 billion. Angola converted $38 billion. Tanzania converted $18 billion. Uganda converted $14 billion. Mozambique converted $12 billion. Zimbabwe converted $8 billion. 47 nations combined converted $420 billion European holdings to gold and other hard assets over 6 months. Coordinated, gradual, undetected until completion. By time you noticed pattern in August 2025, majority was already converted. By time you raised alarms in September 2025, African gold reserves doubled. By time you understood implications in October 2025, conversion was irreversible. Moved gold to Continental Vault specifically designed to resist Western seizure attempts. Kigali Vault built 2024 under Central Bank of Rwanda, underground facility, reinforced concrete, biometric security, armed guards. Storage capacity 1,200 tons, currently holds 840 tons from multiple nations. Accra Vault built 2023 under Bank of Ghana, similar specifications, capacity 800 tons, currently holds 680 tons. Johannesburg Vault expanded 2024 using existing South African Reserve Bank facility, capacity 2,400 tons, currently holds 1,140 tons. Total Continental Vault capacity 4,400 tons. Total current holdings 3,260 tons worth $280 billion. Safe, secure, sovereign. You cannot access these vaults, cannot freeze gold inside them, cannot seize reserves protected by African security forces and laws. Your asset freeze threats are empty because assets are beyond your reach. Converted bonds to commodities stockpiling physical reserves you cannot freeze, not just gold, oil, copper, aluminum, zinc, wheat, corn, fertilizer, everything tradable and storable. Nigeria stockpiled 180 million barrels of crude oil, built underground storage caverns, strategic petroleum reserve on Nigerian model. Ghana stockpiled 240,000 tons of copper in warehouses. Zambia stockpiled 180,000 tons. Congo stockpiled 320,000 tons. Combined copper reserves worth $18 billion. Kenya stockpiled 840,000 tons of wheat and corn. Uganda stockpiled 620,000 tons. Tanzania stockpiled 480,000 tons. Combined food reserves securing 2 years of imports. Ethiopia stockpiled 2.4 million tons of fertilizer, critical for agriculture. Morocco stockpiled 1.8 million tons of phosphates for fertilizer production. South Africa stockpiled 480,000 tons of steel. Zimbabwe stockpiled 180,000 tons of ferrochrome. Botswana stockpiled diamonds worth $8.4 billion in secure vaults. Every nation stockpiling strategic commodities. Total value, $124 billion in physical commodities stored in African facilities beyond European jurisdiction. Cannot freeze oil in Nigerian caverns, cannot seize copper in Congolese warehouses, cannot touch food in Kenyan silos, cannot access any commodity stored in Africa. Your asset freezes cannot reach physical reserves on our territory. Diversified reserves to currencies you do not control. Yuan, rupees, gold, reals, ringgit, baht, real, peso, every currency except dollar and euro. China holds 28% of global manufacturing. India holds 18%. ASEAN holds 12%. These economies matter. Their currencies matter. We hold their currencies now. Burkina Faso shifted reserves to 40% gold, 25% yuan, 15% rupees, 10% commodities, 10% diverse currencies. Nigeria shifted to 35% gold, 30% yuan, 15% oil stockpiles, 10% rupees, 10% diverse. Kenya shifted to 45% gold, 20% yuan, 15% food stockpiles, 10% rupees, 10% diverse. Every nation similar pattern. 47 nations combined hold $168 billion in yuan, $84 billion in rupees, $42 billion in other non-Western currencies, $280 billion in gold, $124 billion in commodities. Total, $698 billion in reserves beyond your control. You can freeze our dollar holdings, can freeze euro holdings, cannot freeze yuan held in Chinese banks, cannot freeze rupees in Indian banks, cannot freeze gold in African vaults, cannot freeze oil in Nigerian caverns, cannot freeze copper in Congolese warehouses. We hold $84 billion remaining in European jurisdictions. You can freeze that. Costs us $84 billion one-time loss. You lose $512 billion we nationalized. We lose $84 billion you freeze. Net gain to us, $428 billion. Mathematics is clear. You lose. We win. Your threats are worthless. Physical reserves you cannot freeze because physical reserves are on our territory under our control, protected by our laws and our security forces. This is key difference from financial reserves. Financial reserves are numbers in computer systems. Numbers can be frozen with keystrokes. Numbers can be seized with court orders. Numbers are vulnerable. Physical reserves are different. Physical gold in vault must be physically accessed. Physical oil in cavern must be physically reached. Physical copper in warehouse must be physically removed. You cannot access African territory, cannot invade to seize reserves, cannot send commandos to steal gold, cannot physically reach reserves we hold. Your asset freeze threats assume reserves are financial instruments in European custody. Most reserves are now physical commodities in African custody. Your threats are based on false assumptions, based on believing we left reserves in your reach. We did not. We moved them. You cannot freeze what you cannot reach, cannot seize what you cannot access. Your threats fail before attempting. By time you attempt asset freezes, analyzing nationalization and deciding response and issuing freeze orders, we will hold minimal European assets. $84 billion down from $420 billion 6 months ago. $84 billion is 16% of what we held. 84% was moved beyond your reach. You can freeze 16%. Hurts but survivable. Cannot freeze 84% because 84% is gold in Kigali, and oil in Lagos, and copper in Kinshasa, and wheat in Nairobi. Cannot freeze physical reserves on our territory. By time you act, we hold almost nothing you can freeze. Timing matters. We moved first. You respond second. Second is too late. Assets are gone. Your freezes are empty gestures, freezing minimal amounts while vast majority remains beyond reach. You lose this battle through delay, through assuming we would wait for your response. We did not wait. We moved. You lose. You cannot recover $512 billion we nationalized, cannot seize African banks on African territory, cannot send bailiffs into Ouagadougou to repossess BNP Paribas branches, cannot deploy military to recover assets, cannot use legal process to force return. Assets are on our territory, under our control, protected by our sovereignty. You have no mechanism to recover, can freeze $84 billion in Europe, cannot recover $512 billion in Africa. Mathematics is clear. $512 billion nationalized, $84 billion frozen. Net African gain, $428 billion. Net European loss, $428 billion. You lose. We win. Your threats cannot change this arithmetic, cannot reverse nationalization through asset freezes, cannot punish us more than we benefit. Your threats are worthless because mathematics favor us decisively. You threaten exclusion from SWIFT, attempting to isolate African banks from international financial system. SWIFT is Society for Worldwide Interbank Financial Telecommunication, Belgian cooperative owned by member banks. Processes 42 million messages daily, representing $5 trillion in transactions. Critical infrastructure for international banking. You control SWIFT through board seats and regulatory pressure. Used SWIFT as weapon repeatedly. Cut Iran from SWIFT 2012. Cut North Korea from SWIFT 2017, cut Russia partially from SWIFT 2022, cut Afghanistan from SWIFT 2021. SWIFT exclusion cripples international banking, prevents cross-border transactions, prevents trade settlements, prevents foreign currency operations, economic isolation through technical means. This is your plan for us. Cut 54 African nations from SWIFT, isolating our banks internationally, forcing economic crisis, forcing reversal of nationalization. Standard playbook. We know this. We prepared for this. We built alternative years before nationalization. Continental payment system operational since June 2025. Built by African tech firms with assistance from partners understanding Western payment system weaponization. Headquartered in Kigali alongside Continental Banking Union. Built on modern architecture, secure messaging, encrypted communications, redundant servers. ISO 2022 messaging standard ensuring compatibility. Connects all participating central banks directly. 47 central banks linked through CPS network. Connects commercial banks in member nations. 680 commercial banks connected. Processes transactions in local currencies, eliminating foreign exchange costs. CFA franc, naira, shilling, birr, cedi, kwacha, every African currency. Processes cross-border payments, settling through Continental Banking Union accounts. Real-time settlement, lower fees than SWIFT. 0.4% transaction cost versus SWIFT's 2% to 4%. Better technology, better terms, African control. Connects to alternative international payment systems, avoiding SWIFT dependency. Links to Chinese cross-border interbank payment system launched 2015. CIPS processes yuan-denominated transactions. 1,400 financial institutions across 110 countries connected. $50 trillion processed annually, growing 80% per year. CPS links directly to CIPS, enabling yuan settlements. Links to Russian System for Transfer of Financial Messages, SPFS, launched 2014 after Crimea sanctions. 159 Russian banks plus 52 foreign banks connected across 20 nations, processes ruble-denominated transactions. CPS links to SPFS enabling ruble settlements. Links to Indian Unified Payments Interface and RuPay system processing rupee transactions. Links to Brazilian Pix instant payment system. Links to ASEAN Payment Connectivity Framework. Links to every significant non-Western payment system. Can route transactions through multiple paths. Can settle in multiple currencies. Can process every transaction type we need. Trade settlements, investment flows, remittances, government transfers, everything. Can process every transaction we need without SWIFT. International trade settled through CPS SIPS link using yuan, or through CPS SPFS using rubles, or through CPS UPI using rupees. Chinese imports paid in yuan, Russian imports paid in rubles, Indian imports paid in rupees. Intra-African trade settled through CPS in local currencies. Remittances processed through CPS at 0.4% cost versus Western Union's 7%. Government transactions processed through CPS. Aid flows processed through CPS. Investment repatriation when approved processed through CPS. Every transaction category covered. Every counterparty reachable through linked systems. No dependency on SWIFT. No vulnerability to SWIFT exclusion. SWIFT exclusion is inconvenient, not catastrophic. Inconvenient because some correspondent banks still require SWIFT. Some European trade partners prefer SWIFT. Some legacy systems built around SWIFT. Transition period required but not catastrophic, not economic isolation, not inability to transact, not crisis forcing reversal. Inconvenient transition to alternative systems already operational and tested. We prepared for this. Tested CPS extensively before nationalization, processed 124 billion in transactions through CPS in 6 months before nationalization. Volume increased 340% monthly. System handled load perfectly, zero downtime, zero hacks, zero transaction failures, proved CPS works, proved alternatives exist, proved SWIFT exclusion is survivable. We prepared for this threat specifically, ran scenarios, tested systems, built redundancy, established correspondent relationships outside SWIFT network, Chinese banks serving as correspondents, Russian banks serving as correspondents, Indian banks serving as correspondents, Middle Eastern banks serving as correspondents. Dozens of correspondent relationships established over 2 years anticipating SWIFT exclusion. Can route transactions through correspondents accessing CEPs or SPS or UPI or other systems. Can settle in yuan or rubles or rupees or gold. Multiple paths to every destination. SWIFT is one path. We built 40 other paths. You cut one path. We use other paths. Your exclusion inconveniences us briefly, then becomes irrelevant as transactions reroute automatically through alternative systems. Your threat is empty because alternatives exist and function well. We built alternatives specifically to neutralize this threat, built knowing you would weaponize SWIFT, built knowing exclusion was inevitable, built infrastructure rendering exclusion ineffective. This is preparation, this is sovereignty, this is intelligence. We understood your playbook, anticipated your moves, built defenses before attacking. Now you execute predicted move. We activate prepared defense. Your move fails. Your threat is neutralized. Your weapon is obsolete. We built alternatives. Alternatives work. Alternatives are superior in many ways. Lower costs, faster settlement, more currencies, better technology. You forced us to build alternatives by weaponizing SWIFT against others. Alternatives proved superior to your monopoly system. We are grateful you forced us to build better systems. Your threat is empty because threat forced innovation surpassing your capabilities. You threaten legal action in international courts attempting to force compensation for nationalized assets worth $512 billion. Standard legal strategy. Claim investment treaty violations. Claim expropriation without compensation. Claim denial of justice. Sue an International Center for Settlement of Investment Disputes. Sue an International Court of Justice. Sue in arbitral tribunals. Obtain judgments requiring compensation. Attempt to enforce through asset seizures and trade sanctions. This is what you did to Argentina, did to Venezuela, did to Ecuador, did to Bolivia. Forced settlements or years of litigation. You will try same with us. Standard playbook. We prepared for this too. We denounced bilateral investment treaties 6 months ago anticipating legal action. Buyouts are treaties protecting foreign investment, require compensation for expropriation, provide arbitration for disputes. Every African nation signed dozens of buyouts with European nations and United States. Buyouts gave you legal leverage. We eliminated that leverage. Burkina Faso formally denounced 32 bilateral investment treaties in June 2025. Mali denounced 28. Niger denounced 24. Senegal denounced 38. Nigeria denounced 42, Kenya denounced 36. Every participating nation denounced buyouts with advance notice required by treaty terms. Most BITs require 6 months notice. We gave notice in June 2025. Nationalized in December 2025. Timing ensured BITs were invalid when nationalization occurred. Your legal claims based on BIT violations fail because BITs were denounced before nationalization. No treaty, no violation, no legal basis for claims. Withdrew from international arbitration conventions eliminating venues for your lawsuits. ICSID convention provides World Bank arbitration for investment disputes. We withdrew from ICSID. New York Convention provides arbitration enforcement. We withdrew from New York Convention. Every African nation participating in nationalization withdrew from international arbitration frameworks over 6 months preceding nationalization. Withdrawals were coordinated, timed perfectly, effective when nationalization occurred. You have no arbitration venue. ICSID does not have jurisdiction. National courts do not enforce foreign arbitral awards after New York Convention withdrawal. You cannot sue in international arbitration, cannot obtain enforceable judgments. Your legal action has no venue. Assert sovereign immunity blocking your lawsuits in national courts. Sovereign immunity is principle protecting sovereign nations from foreign court jurisdiction. We assert sovereign immunity against any lawsuit in European courts. Your courts cannot obtain jurisdiction over sovereign acts of African governments nationalizing banks on African territory. Sovereign acts are immune from foreign court review. Your courts cannot hear cases, cannot obtain jurisdiction, cannot issue judgments, can issue judgment anyway claiming universal jurisdiction or other creative theories. Judgment is unenforceable because we do not recognize jurisdiction, do not participate in proceedings, do not accept service of process, do not acknowledge legitimacy. Your judgment is paper without force, cannot enforce against sovereign nation refusing recognition. Your legal action has no venue because we withdrew from international arbitration and assert sovereign immunity in national courts. No jurisdiction, nowhere to sue, nowhere to obtain enforceable judgment. You can sue in European courts claiming jurisdiction anyway, can obtain default judgment when we refuse to participate, cannot enforce judgment, cannot seize assets beyond the $84 billion in European jurisdiction we already accepted you would freeze, cannot enforce in Africa because we do not recognize your courts. Our courts will not enforce European judgments against African governments for sovereign acts. Your judgment is worthless paper achieving nothing beyond symbolic victory meaning nothing. No jurisdiction means your lawsuits fail at threshold before reaching merits. Even if jurisdiction existed, your claims would fail on merits. Nationalization is sovereign right under international law, recognized right, exercised historically by dozens of nations. United States nationalized British property during Revolution. Mexico nationalized oil 1938. Iran nationalized oil 1951. Egypt nationalized Suez Canal 1956. Cuba nationalized American property 1960. Chile nationalized copper 1971, Libya nationalized oil 1973, Venezuela nationalized oil 2007. Nationalization is legitimate sovereign act when serving public purpose. Our nationalization serves public purpose of financial sovereignty and development, legitimate under international law. Your claims fail on merits even if jurisdiction existed, but jurisdiction does not exist. Your legal action fails at every stage. No enforcement mechanism even if you obtain judgment. Judgment requires enforcement to matter. Enforcement requires seizing assets or blocking trade or imposing sanctions. You can seize $84 billion in European jurisdiction, already discussed. Cannot seize $512 billion nationalized assets in Africa. Cannot seize gold in Kigali vaults. Cannot seize oil in Nigerian caverns. Cannot seize anything on African territory. Can attempt trade sanctions as enforcement. Sanctions require international cooperation. China will not cooperate. India will not cooperate. Russia will not cooperate. ASEAN will not cooperate. Middle East will not cooperate. Latin America will not cooperate. You can sanction using American and European trade only. 54 African nations trade increasingly with alternative partners. Your trade sanctions are painful but survivable. Cannot enforce judgment through sanctions when target has alternative markets. Cannot enforce through asset seizures when assets are beyond reach. Your judgment is unenforceable. Unenforceable judgments are worthless. You can obtain judgment in European court claiming jurisdiction through creative theories. Obtain judgment requiring $512 billion compensation. Judgment is worthless because it is unenforceable. We do not participate in proceedings. Do not recognize jurisdiction. Do not acknowledge legitimacy. Do not pay judgment. You cannot enforce. Your legal threats are worthless paper achieving nothing except waste of legal fees paid to European lawyers. We anticipated legal action. We eliminated legal vulnerabilities. We prepared defenses. Your legal threats fail before beginning. Your lawsuits are worthless exercises in futility. Sue if you want. Waste money on lawyers. Obtain unenforceable judgments. Changes nothing. We keep $512 billion. You keep worthless paper judgments. We win, you lose. Your legal threats are empty. You threaten credit ratings downgrades attempting to increase our borrowing costs, making nationalization economically painful. Standard financial weapon, Moody's, S&P, Fitch. Three Western rating agencies controlling 95% of ratings market. Downgrade sovereign credit ratings claiming nationalization increases default risk. Downgrades increase borrowing costs as investors demand higher yields compensating for perceived risk. Higher costs pressure governments to reverse nationalization to restore ratings. This is plan. Moody's downgraded Burkina Faso from B to CCC within 24 hours of nationalization. S&P downgraded to CC. Fitch downgraded to C. Lowest ratings implying near certain default. Other nations received similar downgrades. Nigeria downgraded from B plus to B. Kenya downgraded from B to CCC. Ghana downgraded from CCC plus to CC. Every participating nation downgraded multiple notches. Coordinated downgrades sending message. Reverse nationalization or remain shut out of international capital markets. Standard playbook. We prepared for this too. We do not borrow from you anymore. Do not need international capital markets when we have Continental Banking Union. CBU capitalized with $512 billion in nationalized assets. Assets seized from foreign banks operating across 54 African nations. BNP Paribas assets. Societe Generale assets. Standard Chartered assets. EcoBank assets. Barclays assets. Citibank assets. Every foreign bank nationalized December 14, 2025. Every asset transferred to Continental Banking Union. $512 billion total capitalization can lend $5.12 trillion at conservative 10-to-1 leverage. Standard banking leverage ratios applied. Basel III compliant leverage maintained. $5.120 trillion total lending capacity created from nationalized assets. Our combined borrowing needs are $180 billion annually. 47 nations, 180 billion total annual financing requirements. Roads, railways, ports, hospitals, schools, power plants, water systems. All development needs total 180 billion annually. CBU capacity exceeds needs by factor of 28, 28 times more lending capacity than required. 28 times our borrowing needs available from Continental Banking Union alone. Do not need your capital markets. Do not need your investors. Do not need your institutional funds. Do not need your pension allocations. Do not need your sovereign wealth participation. Do not need your ratings. Borrow from Continental Banking Union at 4% interest regardless of ratings. 4% fixed. 4% guaranteed. 4% for every member nation. Kenya borrows at 4%. Nigeria at 4%. Ethiopia at 4%. Ghana at 4%. Senegal at 4%. Tanzania at 4%. Every nation 4% regardless of what Moody's assigns. Regardless of what Standard & Poor's declares. Regardless of what Fitch publishes. CBU does not use Western ratings and credit decisions. Zero weight given to external ratings. Zero consideration of Moody's opinions. Zero reference to Standard & Poor's analysis. Zero consultation with Fitch assessments. Uses own credit analysis based on fiscal capacity, development projects, and repayment history. CBU Credit Committee examines government revenues, examines tax collection capacity, examines debt service ratios, examines project viability, examines repayment history with Continental Banking Union and regional development banks, examines economic growth trajectories, examines export earnings, examines foreign reserves, makes independent credit decisions based on African economic realities rather than Western geopolitical preferences. Ratings from Moody's and S&P and Fitch are ignored completely, carry zero weight in CBU lending decisions, have zero influence on interest rates charged, have zero impact on loan approval processes. CBU issued public statement December 15, 2025 declaring Western ratings agencies carry zero weight in lending decisions. Statement released 3:14 p.m. Kigali time. Statement broadcast across 47 member nations simultaneously. Statement clarified that downgrades would not affect access to CBU financing or interest rates charged. Made explicit that Moody's downgrade of Kenya from B1 to B3 carries no weight. Made explicit that Standard & Poor's downgrade of Nigeria from B to B- carries no weight. Made explicit that Fitch downgrade of Ghana from B to CCC carries no weight. Markets understood message. African government bonds held value despite downgrades because CBU provides alternative financing source. Kenyan 10-year bonds traded at 6.2% yield December 14th. Traded at 6.4% December 16th after downgrade. 2 basis points movement. Negligible market reaction. Nigerian bonds stable. Ghanaian bonds stable. Markets recognize Continental Banking Union backstop makes Western ratings irrelevant to African sovereign debt. Borrow from alternative lenders at similar rates. China Development Bank lends to African governments at 2.8% for infrastructure projects, 2.8% for 30-year terms, 5-year grace periods, no structural adjustment conditions, no privatization requirements, no austerity demands, lends based on project quality and repayment capacity. Asian Infrastructure Investment Bank lends at 3.2%, same terms, same lack of policy interference, same project-based credit assessment. BRICS New Development Bank lends at 3.6%. Islamic Development Bank lends at 2.4%, lowest rate of all alternative lenders, 2.4% for infrastructure and social development projects across member nations. All offer rates better than or comparable to Continental Banking Union. China Development Bank at 2.8% beats CBU 4% rate. Islamic Development Bank at 2.4% beats CBU rate. Asian Infrastructure Investment Bank at 3.2% beats CBU rate. BRICS New Development Bank at 3.6% beats CBU rate. Only CBU charges 4%. All alternatives charge less. All ignore Western credit ratings in lending decisions. China Development Bank does not consult Moody's before approving loans. Asian Infrastructure Investment Bank does not reference Standard & Poor's ratings. BRICS New Development Bank does not consider Fitch assessments. Islamic Development Bank uses own credit analysis independent of Western agencies. All base credit assessment on project quality and repayment capacity. Examine whether projects generate revenue. Examine whether governments have fiscal space for debt service. Examine whether borrowers have history of repayment. Make credit decisions on economic fundamentals rather than geopolitical bias embedded in Western ratings. All provide ample lending to 47 participating nations despite downgrades. China Development Bank approved $8.4 billion for Kenyan railway expansion December 18, 2025, 3 days after Moody's downgrade. Rate unchanged at 2.8%. Terms unchanged. Asian Infrastructure Investment Bank approved $5.6 billion for Tanzanian port modernization December 19, 4 days after ratings downgrades across East Africa. Rate unchanged at 3.2%. BRICS New Development Bank approved $4.2 billion for South African renewable energy December 20th. Rate unchanged at 3.6% despite Moody's downgrade from BB to BB-. Islamic Development Bank approved $3.8 billion for Senegalese agricultural development December 21st. Rate unchanged at 2.4%. Total alternative lending capacity exceeds $400 billion annually. China Development Bank commits $120 billion annually to African infrastructure through 2030. Asian Infrastructure Investment Bank commits $80 billion annually. BRICS New Development Bank commits $60 billion annually. Islamic Development Bank commits $40 billion annually. Regional development banks commit another $100 billion annually. Total exceeds $400 billion. Our borrowing needs are $180 billion annually. Alternative lenders provide more than double our needs, provide 2.2 times our annual financing requirements. Do not need Western capital markets, do not care about Western ratings, have ample alternative financing at reasonable rates. Your downgrades are irrelevant. Your ratings agencies are irrelevant to governments with alternative financing. Ratings matter when borrowers depend on Western capital markets. Ratings matter when governments must issue bonds in New York or London. Ratings matter when pension funds and insurance companies dominate your investor base. Ratings matter when you have no alternatives. Ratings are irrelevant when borrowers access alternative markets ignoring ratings. Irrelevant when Continental Banking Union provides 28 times your borrowing needs. Irrelevant when China Development Bank offers cheaper rates than Western markets ever provided. Irrelevant when Asian Infrastructure Investment Bank approves loans in 72 hours regardless of Moody's opinion. Irrelevant when BRICS New Development Bank finances projects Western institutions rejected. Irrelevant when Islamic Development Bank charges 2.4% while Western markets demand 8% for same credit risk. We built alternative markets specifically to escape ratings agency power, built Continental Banking Union over 18 months, coordinated across 47 finance ministries, coordinated across 47 central banks, pooled nationalized banking assets, established common lending standards, created independent credit assessment frameworks, launched operations December 15, 2025 with $5.12 trillion lending capacity, developed relationships with alternative lenders, secured credit lines exceeding needs, negotiated framework agreements with China Development Bank, negotiated agreements with Asian Infrastructure Investment Bank, negotiated agreements with BRICS New Development Bank, negotiated agreements with Islamic Development Bank. Total committed credit lines exceed $400 billion annually, made ourselves immune to ratings downgrades, built financial architecture independent of Western approval, created lending capacity 28 times our needs, secured alternative financing double our requirements. Your downgrades were anticipated, were expected, were planned for. New Moody's would downgrade after nationalizations. New Standard and Poor's would follow, new Fitch would join, expected coordinated downgrades, prepared for coordinated downgrades, built continental banking union specifically to neutralize downgrade impact, secured alternative credit lines specifically to bypass Western markets. Downgrades occurred exactly as predicted. Moody's downgraded 47 nations December 15th and 16. Standard and Poor's downgraded December 16th and 17. Fitch downgraded December 17 and 18. Perfect coordination across three agencies. Perfect timing. Perfect irrelevance. Effect was exactly as prepared for. Zero effect. No impact on borrowing costs. Continental Banking Union charges 4% regardless of ratings. China Development Bank charges 2.8% regardless of ratings. Asian Infrastructure Investment Bank charges 3.2% regardless of ratings. No change in rates after downgrades. No impact on financing access. Kenya secured $8.4 billion from China Development Bank 3 days after downgrade. Tanzania secured $5.6 billion from Asian Infrastructure Investment Bank 4 days after downgrade. South Africa secured $4.2 billion from BRICS New Development Bank 5 days after downgrade. Access to financing unchanged. Loan approvals continued. Disbursements proceeded. No impact on development plans. Railway projects continued. Port expansions continued. Power plant construction continued. Hospital construction continued. School building continued. Every development project financed as planned. Continental Banking Union filled every financing gap. Alternative lenders provided every dollar required. Downgrades were empty gestures achieving nothing. Change no interest rates. Change no credit access. Change no development trajectories. Your ratings agencies proved irrelevant. Your threats failed immediately. Markets ignored downgrades because markets recognized alternative financing eliminates ratings leverage. Bond yields moved 20 basis points. Negligible. Irrelevant. Your power ended December 15, 2025. We do not need you. We do not borrow from you. We built alternatives that work better. Test us if you doubt this. Your business model dies with ratings irrelevance. Ratings agencies earn revenue from issuing ratings, earn fees from rated entities, earn subscription fees from investors. Moody's earned $4.8 billion in 2024. Standard & Poor's earned $8.2 billion. Fitch earned $2.1 billion. Total $15.1 billion across three agencies. Revenue model depends on ratings mattering, depends on investors using ratings, depends on borrowers caring about ratings, depends on market consequences from downgrades. When ratings become irrelevant, revenue disappears. African sovereign ratings generated $420 million annually for Moody's, generated $680 million for Standard & Poor's, generated $240 million for Fitch. Total $1.34 billion in annual revenue from African sovereign ratings alone. Revenue disappears when African governments stop issuing bonds in Western markets. When Continental Banking Union replaces Western capital markets, when alternative lenders ignore Western ratings completely, Moody's cannot charge fees for ratings nobody uses. Standard & Poor's cannot sell subscriptions for analysis nobody reads. Fitch cannot maintain revenue when ratings carry zero weight. Your threats failed. Your business model collapsed. Your relevance ended. Investors recognize ratings bias now, recognize ratings agencies downgrade nations challenging Western interests regardless of economic fundamentals. Moody's downgraded Russia 11 times in 24 months after Crimea, downgraded Venezuela 14 times after nationalizations, downgraded Iran continuously under sanctions, downgraded every nation challenging dollar hegemony. Downgrades correlate with geopolitical defiance rather than credit risk. Nigeria maintained debt to GDP ratio of 32% when downgraded to B-. Ghana maintained 48% debt to GDP when downgraded to CCC. Both ratios better than United States at 123% debt to GDP, better than Japan at 254%, better than Italy at 140%. Yet United States rated AA, Japan rated A+, Italy rated BBB. Rating inconsistency exposes political bias. Investors see bias clearly now. Understand ratings reflect Western geopolitical preferences rather than objective credit analysis. Understanding destroys ratings credibility, destroys ratings influence, destroys ratings relevance. African governments coordinated ratings independence deliberately. Finance ministers met Istanbul July 2024, discussed ratings agency leverage, discussed Western capital market dependence, discussed need for alternatives, met again Athens September 2024, discussed Continental Banking Union concept, discussed capitalization from nationalized assets, discussed credit assessment frameworks independent of Western agencies, met again Accra November 2024, finalized Continental Banking Union Charter, finalized lending standards, finalized governance structures, met again Kigali January 2025, signed Continental Banking Union Founding Treaty, established headquarters, appointed governing council, appointed credit committee, 14 months from concept to operational institution, 14 months to build alternative, eliminating ratings leverage, coordination perfect, execution flawless, results immediate. Your ratings carry weight only through dependence. Eliminate dependence and ratings become meaningless. We eliminated dependence December 14th, 2025, nationalized foreign banks, capitalized Continental Banking Union, secured alternative credit lines, launched independent financing architecture, ratings lost all leverage instantly, Moody's downgraded 47 nations, markets ignored downgrades, borrowing costs unchanged, credit access unchanged, development plans unchanged, perfect proof ratings are irrelevant without dependence, perfect proof we escaped your control, perfect proof we built something better, your threats failed, your power ended, your relevance died. We do not need you anymore. We built alternatives. We secured financing. We control our development. Test us if you doubt this. Moody's downgraded us, immediately executing predictable playbook. Continental Banking Union immediately issued statement neutralizing downgrade impact. This sequence proved ratings irrelevance, proved alternatives work, proved we prepared correctly. You downgraded. We ignored. We borrowed at same rates from alternative lenders. We funded same projects. We continued same development. Your downgrades changed nothing. Your threats were empty. Your weapon was obsolete. We built immunity to ratings through alternatives. Immunity proved effective. Your threats failed completely. Markets understood situation. African government bonds maintained value despite downgrades because investors understood Continental Banking Union provided backstop, understood alternative lenders provided financing, understood downgrades were political, not economic. Bond yields rose slightly, reflecting transition uncertainty. Rose 40 basis points average. Insignificant increase, did not reflect ratings downgrades implying near certain default, reflected investor understanding that downgrades were political weapons, not economic assessments. Markets saw through your manipulation. Markets understood alternatives existed. Markets priced bonds based on economic reality, not political ratings. Your ratings mean nothing when markets understand ratings are political weapons. Your threats failed because markets are smarter than you assumed. Your threats failed immediately upon deployment. Downgrades issued December 15th, CBU statement issued December 15th, bond yields rose minimally, alternative lenders continued financing, development projects continued, nothing changed except your credibility decreased. Decreased because you deployed weapon that failed visibly, deployed ratings downgrades that were ignored, proved your ratings are political tools, not economic assessments, proved your agencies are worthless when alternatives exist. Your credibility loss is permanent. Your ratings agencies are permanently discredited. Future downgrades will be ignored even more completely. You destroyed your own weapon through premature deployment against prepared defenses. Strategic failure. You threaten to block development aid, attempting to pressure governments through budget shortfalls. Aid is annual transfers from Western governments to African governments for development projects, technical assistance, and budget support. United States provides $8 billion annually to Africa. European Union provides $12 billion. France provides $4 billion. Britain provides $3 billion. Germany provides $2.8 billion. Other Western nations combined provide $6.2 billion. Total Western aid to Africa, $36 billion annually. You threaten to block all aid to 47 participating nations, punishing nationalization. Aid cutoff would create $21 billion budget shortfall across participating nations. $21 billion is 62% of total aid because participating nations receive more aid than non-participating nations. Budget shortfall would force cuts in services, salaries, and development projects. Would create political pressure on governments to reverse nationalization, restoring aid flows. This is your theory. Your theory is wrong. We do not need your aid because aid was always less than extraction, far less. Extraction was $51.2 billion annually through foreign banking system alone. Additional extraction through trade, mining, and other channels totaling $140 billion annually across all sectors. You extracted $140 billion annually, provided $21 billion in aid, net extraction $119 billion annually. We ended extraction through nationalization and other sovereignty measures. Losing $21 billion in aid costs us $21 billion. Keeping $140 billion through ending extraction gains us $140 billion. Net benefit $119 billion annually. This is excellent trade. We made that trade gladly. We made that trade knowingly. We calculated precisely. Numbers are clear. Your aid cutoff cost us less than your extraction cost us. We are richer without your aid than we were with your aid plus extraction. Mathematics is decisive. Losing $21 billion in aid while keeping $140 billion in wealth is excellent trade. $21 billion funds some development projects and budget items. Losing it requires adjustments, requires reallocation, requires prioritization. Difficult, but manageable. $140 billion kept through ending extraction funds far more development. funds structural transformation, funds industrial development, funds infrastructure at scale, funds everything aid claimed to fund but never adequately funded because aid was always insufficient compared to extraction. We can fund more development with retained wealth than we ever funded with aid. Aid was symbolic. Retention is substantive. We chose substance over symbols, chose correctly. We made that trade gladly because aid always came with conditions, conditions undermining sovereignty, conditions requiring policy changes serving your interests, conditions forcing structural adjustment, conditions demanding privatization, conditions requiring trade liberalization, conditions pressuring diplomatic alignment. Aid was a tool of control. Every dollar came with conditions reducing sovereignty. We are done being controlled. We rejected aid to escape control. Rejected $21 billion annual aid to gain policy freedom. Policy freedom is worth more than $21 billion. Freedom to set interest rates serving our development. Freedom to protect infant industries. Freedom to manage capital flows, freedom to conduct independent foreign policy, freedom to serve our people rather than your interests. This freedom is priceless. We gained freedom by rejecting aid, best trade we ever made. Your aid was a tool of control for 66 years, tool we are done accepting, done subordinating policy to aid conditions, done implementing structural adjustment for aid disbursements, done privatizing assets for aid tranches, done liberalizing trade for aid programs, done aligning diplomatically for aid flows, done with all of it. We chose independence over aid, chose sovereignty over money, chose freedom over subordination. This is correct choice. This is only choice for sovereign nations. We are sovereign now. Sovereignty means rejecting foreign control, including through aid. We rejected aid. We gained sovereignty. We are satisfied with trade. Keep your aid. We do not want it. Do not need it. Do not miss it. Keep your $21 billion with all its conditions and controls. We keep our $140 billion with our sovereignty intact. We keep our policy freedom. We keep our independence. Better deal. Much better deal. You thought aid cutoff would pressure us. You thought wrong. Aid cutoff liberates us, frees us from final control mechanism. We are grateful you cut aid. Grateful you removed final chain. We are completely free now. Free from debt. Free from extraction, free from conditions, free from control, free from you. Freedom is worth far more than $21 billion. We gained freedom. You lost control. We win decisively. Every threat is empty. Asset freezes affect minimal holdings. Swift exclusion fails against alternatives. Legal action has no venue. Credit downgrades are irrelevant. Aid cutoff frees us from control. Every weapon you possessed for 66 years is obsolete. Obsolete because we built defenses, built alternatives, built independence, built sovereignty. You threaten us with weapons that no longer work. Weapons neutralized through preparation. Weapons rendered obsolete through coordination. Weapons proved worthless through testing. Every threat you make fails before execution. Every weapon you deploy breaks against our defenses. You have no power over us, no leverage, no control. Your threats are empty noise. Noise we ignore while building our future. Every lever is broken. Broken because levers required dependency, required isolation, required subordination. We ended dependency through continental banking union, ended isolation through coordination, ended subordination through nationalization. Levers broke when conditions they required disappeared. You pulled levers, nothing happened. Levers are disconnected, disconnected from outcomes. You threaten, nothing changes. You sanction, nothing changes. You downgrade, nothing changes. You sue, nothing changes. You cut aid, nothing changes. Every action you take achieves nothing because levers are broken. Broken permanently, cannot be repaired, cannot be reconnected. We broke them intentionally, broke them systematically, broke them permanently. Your power depended on those levers. Levers are broken, your power is gone. You have no power over coordinated African nations acting collectively. Power you possessed for 66 years depended on divide and rule, depended on isolating nations, depended on picking off nations individually. One nation nationalizes, you isolate, you sanction, you pressure. Nation reverses or collapses, you win. This is how you maintain power for 66 years. This is why nationalization always failed previously. Failed because isolated nations could not resist pressure. We learned a lesson. We coordinated. 47 nations acting simultaneously. Cannot isolate all of us. Cannot sanction all of us. Cannot pressure all of us. Coordinated action breaks your power, breaks permanently. You have no power over coordination, no mechanism to divide us, no ability to isolate, no capacity to pressure. We are unified. We are coordinated. We are immune to your power. Power you possessed for 66 years depended on isolation and division, depended completely on keeping African nations separated, keeping finance ministers from coordinating, keeping central banks from collaborating, keeping governments from unified action. Isolation made each nation vulnerable individually. Division prevented collective resistance. A single nation challenging Western banks faced overwhelming retaliation, faced capital flight, faced sanctions, faced credit rating downgrades, faced international isolation, faced coup attempts, faced regime change operations. A single nation could not survive coordinated Western response. Isolation guaranteed vulnerability. Division guaranteed control. Your power rested entirely on preventing African unity, preventing coordination, preventing collective action. Maintained power for 66 years through isolation and division. Isolation and division no longer exist. Power no longer exists. Simple causation. Direct relationship. Remove foundation and structure collapses. We ended isolation through coordination. Coordination across 47 nations. Coordination across 47 finance ministries. Coordination across 47 central banks. Coordination across 47 intelligence services. Coordination spanning 18 months. Finance ministers met in Istanbul July 2024, met Athens September 2024, met Accra November 2024, met Kigali January 2025. 4 summits, 18 months, perfect secrecy, 0 leaks, planned bank nationalizations together, planned continental banking union together, planned coordinated announcement together, planned enforcement mechanisms together, planned alternative financing together, planned response to sanctions together, planned response to ratings downgrades together. I planned everything together. 47 nations moving as one. Isolation ended. Your primary lever disappeared. We ended division through unity, unity forged through shared interests, shared history of extraction, shared experience of structural adjustment, shared suffering under foreign bank interest rates, shared anger at decades of theft, shared determination to escape financial colonialism. Unity was created through 18 months of coordination, building trust between governments that previously competed, building solidarity between nations that previously worked alone. Unity demonstrated December 14, 2025, when 47 nations nationalized foreign banks simultaneously, 8:34 p.m. across 12 time zones. Burkina Faso nationalized at 8:34 p.m. Ouagadougou time. Nigeria at 8:34 p.m. Lagos time. Kenya at 8:34 p.m. Nairobi time, South Africa at 8:34 p.m. Johannesburg time. Every nation is exactly 8:34 p.m. local time. Perfect synchronization proves perfect unity, proving coordination works, proving division ended. Cannot divide 47 nations acting as one, cannot isolate nations supporting each other, cannot retaliate against one without fighting all. Unity destroys your leverage, division was your weapon, unity disarmed you completely. We ended your power through collective action. Collective action changed everything. A single nation nationalizing banks faces crushing retaliation, faces sanctions destroying the economy, faces capital flight destroying currency, faces international isolation destroying trade, faces coup attempts destroying the government, cannot survive alone. 47 nations nationalizing banks simultaneously cannot be crushed, cannot sanction 47 nations without destroying your own economies, cannot isolate 47 nations representing 67% of global population, cannot launch coup attempts across 47 nations simultaneously, cannot retaliate effectively against collective action. Collective action provides immunity, provides protection, provides power. We understood this, planned 18 months, executed perfectly. Your power died when we unified, died because power depended on conditions that disappeared, depended on isolation preventing coordination, depended on division preventing unity, depended on vulnerability of individual nations. Conditions disappeared December 14, 2025. Isolation replaced by coordination, division replaced by unity, individual vulnerability replaced by collective strength. Foundation of your power destroyed. Power collapsed instantly.